Last week was choppy, and within within all of the choppiness, the largest or the most impacted was the Nifty IT. It was down 9% all through last week. Uh, Firstly, your take with regard to this debate on whether some of our large cap, very significant contributor to the global service industry, some of these companies, you believe that they'll likely get redundant as a result of AI?
Hi, morning to you and your viewers.
Very good.
So I think that's a very extreme statement that they will become redundant. No, I don't think so, basically. But I think they have to find a new way out of this. Maybe in the short term, these stocks are oversold. There has been a strong reaction to announcements in the US, and I think that's what is happening. But I very clearly see that the medium to long term, basically, they have to reinvent themselves. Because both Anthropic and are going to come through basically, and this is going to actually reduce the cost of coding dramatically, and incremental orders would be outcome driven rather than pay by the hour. So I think that's why they have to understand and maybe renew their business models. And that's why I'm saying basically medium to long term, there is a challenge. But I think in the short term, basically, it's overdone.
Interesting. Nishal, as a result of everything that's played out in IT, there's also been an impact across the board. Let me pull out the Nifty FMCG index and the move it made on Friday. Some of the stocks like HUL and the like really took a knock. The Nifty Metal was the other one, which took a real knock in trade on Friday. Do you believe that this entire spillover of IT is likely creating opportunities in other spaces? And are these pockets suddenly looking interesting? What are those that you're looking at?
So I don't think so that FMCG and metals have got to do anything with the IT, because as you know, metals have nothing to do with IT. It's not a capital intensive industry at all, so no issues per se. FMCG also, I don't think so, even if there will be job losses, there's no doubt about that. But FMCG as a base in the consumption wouldn't be impacted. I think the impact would be largely on the big ticket items like real estate and automobiles. That would be the impact as and when it happens. And I think that should get impacted over a period of time. But what I understand, given the geopolitical situation and this uncertainty, I think domestic consumption is what one should focus on. Domestic focused companies, whether it is infrastructure, cement, a lot of FMCG. I think these are the companies basically one should look at.
And that's the other question, right, Kunal? Let's first talk about the precursor of it all, the IT weakness.
For joining us. Nishal, hi, morning. What is the kind of impact that you see for some of the brokers and the market intermediaries after the RBI regulation which has come in?
Sorry, I'm not aware of, I missed that regulation. What regulation we are talking about?
This is with respect to financing financing of all the capital market exposures and the leverage, deleveraging which is required.
Oh, so they are increasing the margins basically.
They are restricting leverage for brokers.
Okay, sorry, I have not followed that. So sorry, I'm not able to comment on that.
What is your take on some of the public sector refiners as well, HPCL, IOC, BPCL?
So I think their valuation looks interesting basically. Oil prices are not going anywhere. I think at these prices, one can accumulate these stocks.
Right, okay.
You suggested that certainly not redundant, but it's certainly disruptive for all of the IT counters. This entire change with regard to AI and what it's likely to bring in terms of IT business models. Your sense with regard to what's the valuation at which one should start getting comfortable despite the disruption?
So I think low double digit is a good place to start getting positive about them, because then you are only giving the value for the cash which they are generating. But given that we do not have the visibility of what is going to eventually happen and who all are going to survive, so I think that's what the thought remains to be, that basically you have to give the value of the cash and going enterprises. So I'm saying that's where I think basically a 12 to 15 time multiple is a good number, basically where you should be looking to accumulate these stocks.
And what about the mid-cap space? They are slightly faster growing as well. Would you ascribe some quantum or a slightly higher multiple to the faster growth that's coming through there?
So I don't know about that growth is going to happen now or not, basically, because the challenge remains to be that the model itself is getting challenged. And as I was telling you, basically with this anthropic model, basically, which is been put out, you are now going to be more output driven rather than actually saying that you will be paid on and it's going to happen over a period of time. I'm not saying basically this is going to happen overnight or in the next 3 months, but slowly I think the industry is headed towards that. And we have to see basically how fast each one of them basically is going to be willing to take the pain and transform themselves. So that is the major thing basically. So I think there is no need for giving them a higher P at the moment.
The other piece, firstly, let me welcome on board Chandan Taparia as well to the conversation, derivatives and technical analyst at Motilal Oswal. Chandan, I'll come to you in just a minute. I want to quickly cover a couple of those gold financiers because Muthoot was the calamity of the day, frankly, on Friday. 11.5% lower down. The numbers at the outset didn't look bad, but tonnage has fallen, customers have fallen, and the street wasn't happy about both of those metrics. There's also Manappuram, which has, over the course of this weekend, received RBI approval for infusion by Bain. This has been, of course, long awaited. It's been in the works. But of course, they are largely, both of these stocks are largely driven by gold prices. And I'd be curious to know, Kunal, if either of these look good for a trade.
See, I think Muthoot actually starts to look a little bit more, I would say weak on the charts, because what happened is not just a 12% correction for the stock price, but the way in which the stock, traded throughout the day. I think it opened with a cut of, I think 4%, 3% or 4% if I'm not wrong. It managed to break below the 50-day moving average. But then the intensity of the sell-off throughout the day was critical. The volumes, I think, clocked for Muthoot Finance on the cash side was almost at a 2-month or a 3-month high for the stock price. So it was not a minor selling for the stock price where the street was taken by a surprise. The selling was very pronounced for the stock. That, I believe, could probably have some bit of effect for the stock in the near term. So I would probably expect that maybe the stock could drop off another 200 odd points, 3,500-ish. Could be a first zone of support for Muthoot Finance.
And now RBI has granted approval to Bain Capital for acquiring up to about 41.7% stake in Manappuram. So that's in any case a stock which is going to be in focus. But Chandan Taparia as well is here. Chandan, hi, good morning. Seems like after a freaky Friday, once again, it's going to be a weak Monday. What are the levels that you're monitoring now on the Nifty and Nifty IT?
Good morning. Thanks for having me. So the market witnessed profit booking decline in last 3 trading session, and the concern is that again it's approaching a key level of 25,450 because this level is working as a key juncture at the time of support and resistance both. But if it drifts below the same, then again the sentiment will be mixed. The index started to form lower top, lower bottom on the hourly and the daily scale until it remains below 25,750. It may be have the mixed bias to retest the key support near 25,000 to 25,200. If I talk about Nifty IT, already it has seen a corrective move in last 2 weeks, has been making lower top, lower bottom. But now it may go to the deep oversold territory. So Nifty IT index, which already seen a correction of more than 13 to 14% in the month, can find support near 30,000, 30,500. So overall, the mixed bias could be there. IT might find some support, has already seen a corrective move, and Nifty may find base near 25,000 to 25,200 marks.
So Chandan, will you still be selling into this weakness or would you be buying anything? What's the stock strategy?
So I don't want to focus on Nifty IT because the immediate trend is negative, and let them settle before we go for bargain buying. I'll focus on the counter, which are comparative resilience and finding some strength, including like few PSU and financial name. So Bajaj Finance could be one name which has negated lower top, lower bottom on the daily and the weekly chart. It has seen a follow-up buying activity for second consecutive week with build-up of long position, and surge in delivery volume was also seen. So with support of 1000, looking for an upside move towards 1055 to 1016 Bajaj Finance. Selective PSU counters could do well. However, SBI has already seen a strong run up in last couple of weeks, but major trend is positive, and here we can continue to be with buy on decline stance. If any chance if counter corrects towards 1170, one can grab the opportunity to buy with support of 1140 for an upside target towards 1250 kind of level. Apart from that, Torrent Pharma could be one name which has been consolidating at higher levels with support of 3980. It can head towards 4200 marks. So I'll be very selective in given market scenario, and will be with selective name and utilize any small decline as a buying opportunity in the name discuss here.
Chandan, how do you look at some of the NBFCs? We spoke briefly about Manappuram, but what about others? Bajaj Finance, you have Muthoot and others.
Yeah, so already discussed about Bajaj Finance. We have positive view on the same. Muthoot Finance have seen a significant build-up of short position. However, multiple supports are visible near 3400, but let it settle their levels, because with significant price surge, we have seen a corrective move in the counter. Manappuram, we can go on buy on decline stance, because here the trend is intact till it holds about 290. Utilize any decline for buying opportunity. And in other financial, Shriram Finance is one of the strongest counter. Here trend is positive. Any decline towards 1040 can be bought for an upside target towards 1100. So Shriram Finance, Bajaj Finance, Manappuram, these could be the couple of names where we have positive stance, and we'll go with buy on decline opportunity.
Right. Okay. That's